Doug Simon from Tredas is our market analyst this week. According to the July USDA World Agriculture Supply and Demand Estimates report, the national average corn yield will remain at 174 bushels per acre, and the 2018-19 corn production forecast is 190 million bushels higher. In addition, stocks were lowered 25 million bushels. The agency reports that corn is silking and the critical pollination period is predicted to occur during middle and late July. For soybeans, according to the WSDA report, the recent tariff that China placed on U.S. soybeans is predicted to cause higher prices for soybeans in China. The 2018-19 global soybean supply and demand forecasts include higher production and lower trade and crush compared to last month. Lower demand and a year-over-year decline in stocks for China are forecast to result in an 8 million ton decline for imports and a 6.8 million ton decline for U.S. exports, which is partly offset by a 2.1 million ton increase for Brazil. We talked with Doug on Thursday to learn more about the WSDA report, but began by asking him about the latest crop progress report.
On Monday, crop conditions came out and we had corn rated at 75% good to excellent. It was down 1 point. Beans were at 71. They were the same. Those were very, high rated crops, some of the best we've had in history. And for the most part, that's what, when you look around the country, that's what it looks like. Around Nebraska, we have pretty good, situation. Obviously a little bit of dryness in kind of southeast Nebraska and across northern Missouri, southern Iowa, over toward kind of the western, southwestern part of Illinois. But when you look at the big overall crop, conditions as good as they are, we had the WSDA report out on Thursday afternoon, and a lot of expectations were for that crop maybe going from like a 174 bushel yield up to maybe a 180. USDA kept that crop size the same at 174 and didn't boost it up, and so that was encouraging to the corn market on Thursday.
Let's talk a little bit about the WSDA report. What are some of the other numbers that came out that you found interesting?
Well, we knew they were going to bump up the acres based on the June acreage and stocks report, and they bumped that up. And when you look at the bottom line on corn and looking at carryover, we actually dropped the carryover just a little bit. We boosted our exports for this last year for our old crop. We boosted exports on corn for new crop, which is good. They cut the feed and residual a little bit and cut some ethanol a little bit, but the bottom line is instead of going up to like a 1.7 or 1.8 bushel or billion bushel carryover, we actually dropped it a little bit and kept it just under 1.6, which is encouraging for corn. On the soybean side, with all the talk about trade going on, that was where the big questions were going to come in. We basically cut the Chinese imports of soybeans from about 103 million metric tons down to 95 million metric tons, so that's a pretty substantial drop. Cut U.S. soybean exports by 250 million bushels. So when you looked at the soybeans balance sheet, we boosted the carryovers there in the U.S. about 195 million bushels and put those numbers above expectations, above the trade guess by about 100 million bushels. So those bigger numbers on the soybean side, and prices, interestingly enough, were up a few cents after the market opened up. They were down 2 cents when I left the office here a little bit ago, and corn was up 5. So actually the report, overall wasn't too damaging. There was a lot of negativity going into the report, and so it was nice to see it kind of be a little quieter in terms of reaction to it.
So no real surprises in the report?
I think the big surprise, the big question is just what's going on with China and what's the trade, how's that going to impact their import level? And I think what the USDA is saying, they're going to drop, from that 103 down to 95, maybe quantified it in people's minds a little bit. When you look at those world numbers, though, on corn, that's encouraging as well, because we came down from a 230 million metric ton number on the world corn numbers down to, closer to 200 million, and now we're dropping down towards 155 million metric tons on the corn. That number has dropped where we've got carryout stocks or days of use or days available down to levels we haven't seen, for over 20 years. And so the corn balance sheet longer term is actually encouraging. We've got an abundance of beans in the world, and if you look at the wheat side of it, the wheat market side of it was pretty quiet in the U.S., but we actually cut like 9.6 million metric tons from the world numbers on production. We actually cut the stocks by about 6 million metric tons, but when you look at the overall wheat side of it, the world exporters, those numbers have tightened up. They're as tight as they've been since 2007. So when you look at corn and wheat stocks, they've tightened up a lot worldwide. Beans are abundant, so longer term you would think those would be a little more supportive versus the beans.
You mentioned the trade issue with China. There's also the trade issue with NAFTA that is a concern. What do you tell people when they ask you about this?
It's interesting. We were in Chicago for R.J. O'Brien, is our futures commission merchant that we work with, and we had meetings up there 2 weeks ago, and the chief ag negotiator, Greg Dowd, was there. And he said NAFTA is all about cars, and he said China, from an ag standpoint in their trade, they're really going to put their interests first. And so when you look at, when you look at that trade thing, Dowd said that Trump's the one that's in charge on this, and he's not giving this up to an undersecretary. He's, really trying to push bilateral negotiations, and he said that he's really taken the view that he wanted to be on the offensive. So longer term, I view it as positive because I view, freer and fairer world trade as being positive, not only for our economy, but for the world. And so, yeah, it's given us a lot of disruptions right now, which are not fun. But when you look at the prices of corn and beans, when you looked at where we were in the springtime, and you use projections, based on the potential for the crop size that we raise and with acres, we're really at those levels where those prices would have projected if we had good crops. We went through the same pattern about this time last year, and so it's not somewhat unexpected in terms of have this big a drop-off.
The last time you were on the show, you talked a little bit about market volatility. Some of that is still there. What are your recommendations?
Well, the markets are always uncertain, and so from our perspective, we always like to do pre-harvest marketing of selling corn and soybeans. And when I was here in mid-May, talked about being 60% sold of our insurance guarantee, and we went through a pretty typical seasonal decline. It happened a little bit earlier than it typically does, and so trying to get those last couple increments were harder to do this year. But going forward, we're glad that we've sold what we've sold. And when I talked about earlier some of the fundamentals that are going on, I think there'll probably be some opportunities on corn. I think to sell. Down the road, we've got a long marketing horizon ahead of us to, sell stuff that we haven't sold yet. But the basis opportunities are interesting today because when we were sitting here 2 months ago, really thought that there'd be a lot more corn moving in this time frame and the basis levels would be a lot wider. And so it's nice to see that we're moving a lot of corn like out of southern Nebraska down into Kansas. And that probably, if that stays a little drier in northeast Kansas, that'll give us some opportunities also for new crop basis opportunities to be better than they were last year, not only because that market's tighter, but because those world numbers are tighter on the corn side.